Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan, co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Great to be here. Happy Monday.
Yeah, happy Cyber Monday. And it seems like people are buying and using buy now, pay later. I just saw some data earlier today. Credit card debt now up to $1.17 trillion. New records there. So the consumers got job. They're out there spending. Credit's going up. And buy now, pay later is getting more popular, right?
Absolutely. I mean, it's a kind of a perfect storm for this company. I mean, when you look at, what consumer loans are doing, I mean, they're at all-time highs, much higher than they were going into the lockdowns of 2020. And, of course, personal savings rates are continuing to fall. So, I mean, people are just buying on credit. They want to buy now and pay later, right? The average credit card rate is over 20%. And so buy now, pay later looks very, very attractive. Now, this is a strong looking stock chart. If you zoom out, though, I mean, this stock's at 68 now. It was 170 just a little over 3 years ago. So it has made a fantastic run. But when you look at what it's been through, it's still not near all-time highs. And so when we look at just their market of buy now, pay later, it's like you said, it's $18.5 billion. We've got some data that suggests that this holiday is going to be plus 11% on buy now, pay later versus last year. A lot of people are moving into that. It's a very attractive option, as I said, as you have no savings and credit card rates are very high. And when you look at this chart, how much of the U.S. Consumer purchases are based on buy now, pay later, I mean, it is incredible. It just continues to grow up around 7%, and that right now. Affirm is about a third. They're 34% of this market, up from 32 last year. And so when you look at what they might measure success on, they have the average number of purchases from their users is about 5.1, up 25%. They added over 300,000 merchants, up 21%. The last quarter, the number of users was up 21% to 19.5 million, and they're 34% of the entire market, up from 32%. So everything is going in the right direction, and most of those numbers in the 20% growth on a year-over-year basis. That's fantastic. I mean, they just added Apple Pay, so they're really doing a great job of penetrating this market and becoming the dominant player of buy now, pay later. And everything is kind of going in the direction, again, of pushing consumers there because, we want it now, but we can't afford it. So it's either got to go on the credit card or you got to just pay later somehow. So when you look at them versus their competition, clearly they're the ones that are doing well. They're the standout, and everyone else is kind of falling off. So it looks like the industry's going in their direction for them, and they're the dominant player. I'm a little surprised that some of their competition is not doing as well, but they are the clear standout here. So I think the next question is just, when do they become profitable? And when that does happen, how much enthusiasm are investors going to have? They're projecting that about this time next year is when they're going to start turning a profit. So right now they're just ramping up users, merchants, and purchases per user, like plus 20% on all three categories. So heading in the right direction, very strong. Do like this company a lot. Again, they have run up significantly up to $68 here, but they've been much higher in the past. So I don't see this as a top. I see this as just a part of the way on their way up to testing those previous highs, and that might take a couple of years or so. But when they do flip that switch to profitable, everybody's going to start looking.
Landon, they came out with their earnings on the 7th of November. Strong growth in sales. Year over year, 41% growth in sales. Strong growth in gross merchandise volume, up 35% year over year. Payment transactions, higher. Lower interest rates, probably helping them. The growth in the Affirm card, also probably helping them. It looks like with the U.S. consumer so strong, the only thing that can really hurt this company right now is a slowdown in the U.S. economy, where this turns into buy now, pay never. Landon, is the problem at the end of this rainbow. The problem is, right, if defaults start picking up. because if your credit cards are high, you switch to this, and this is just taking the expenses and putting them back on the merchant, right? So as long as people keep paying the bills, this is a business strategy that can really work.
Yeah, it is, and we can debate about how things are going to go in the economy. I'm pretty bullish. I'm pretty optimistic, but the consumer's so strong right now, and all the data that we've got is just showing really, strong holiday season, which is a good barometer. Obviously, it doesn't mean everything, but when you're buying for friends and family for gifts, you're gonna scale that based on how well you feel about your personal position, and that all that data looks pretty strong. So it's not a guarantee that the next year is going to go great, but I think it's a telltale that things are going well with the consumer. And so until we see reason to believe that that's going to start, causing problems, then I think Affirm is still in a great position.
Yeah, we've seen some price target hikes today. J.P. Morgan up to 74 from 56, Goldman to 78 from 57. So you're already starting to see that. And Kevin mentioned the gross payment volume up 35% last quarter, 7.66 billion. Visa had gross payment volume of about 61.5 billion. But that's my question, Landon. And this is, because you're not paying interest on this stuff, right? That, will the credit card companies like MasterCard and Visa start looking at this and go, hey, we've got to offer something to kind of offset this because, as you mentioned, interest rates on credit card balances over 20% on average, right? Where the credit card companies start knocking on the door saying, hey, we can't let this go on because they're continuing to grow at a spectacular rate, and maybe they need to get into this business. Are these buyout targets? Because Afterpay got bought up by Block previously for about $29 billion. So is that something you see down the pipeline where, hey, these credit card companies, they're going to, because you can do it for travel now, you can do it for experience, not just products anymore.
Right. So I think you make a great argument. Yes, they need to, Visa, MasterCard, Amex, they need to get in this game. And that's a threat or an opportunity, right? Depending on how that plays out. I mean, if they come in and create their own and compete, obviously that's a threat. It's bad for Affirm. But if they say, you know what, the easiest way for us to get in this game and to dominate is to buy Affirm, then obviously that's a good thing for shareholders. And and frankly, since there's competition, if you're let's say you're Visa and you're thinking about getting in this, and Amex is thinking about it as well, one of them is going to just say, why don't we just buy Affirm, because that's what's going to be the fastest way to market. So I think it's more of an opportunity because I think building out the entire platform and then competing and trying to upend the leader is tough because, even though they have all that data, they have all the buying power, they've got all the core of what you need to build something like this, they're still behind. People are used to this product, and one of them is going to say it's better to buy the company than to build the competitor. So I like it, even though, again, it's a lot of competition out there, especially, those companies are huge, and the amount of transactions and customers that they have is obviously gives them a big leg up. But there's a big head start here. I mean, and that's a big part of it. I can actually remember 15 years ago, Andy went on CNBC and they talked about how Google's margins were unbelievable. Surely somebody's going to come in and eat this up in a free market system. And they were being bearish on Google like 15, 20 years ago. And the thesis is, look, they've got a lead. They're going to continue to expand that lead, even though there are bigger companies out there that can take them on. And since then, I don't know, Google's probably 20x or something. So this is a similar case. They've got a big lead. Yes, there is a juicy free market opportunity for their competition, but I think the easiest path, frankly, is to buy them. And it's one of them. If they start getting into this space, one of them is going to do that. It's probably going to be the one that's second to the idea, right? Like Visa might come in and start building their own, and then Amex says, you know what, we're way behind. Let's just buy Affirm. So I think that's probably the most likely way this plays out. But for now, I think $68 is a great place to get in.
Yep, Klarna overseas also in this space. But Landon, they had earnings, they were good. They're still losing money on an EPS basis, but you mentioned if once they turn positive, that'll be a bonus for this company. I mean, would you guys still buy it here? I mean, it's overbought. I mean, $72 earlier today before falling. I mean, what would be your score on this one?
So, I think it's a buy on dips kind of situation that, we don't, generally speaking, a lot of what we do looks at value. And yes, they've had a big run up over the last little bit. So that's going to take the appeal away. But the fact that all their data is just so strong kind of justifies a higher price. So this is a buy on dip kind of situation. They're not reporting anytime soon. If we had a score, I looked it up before we came on, it's like plus 32, I believe, if I remember. So it's still positive. And if it was trading in the 50s, it would be an incredibly high number because all the data is just so strong. Unfortunately, the market knows that. They just reported they know exactly how strong this company is doing. So I think it's more of a buy on dips kind of situation and accumulate over time because they're in the right place. They're dominating a market that's growing, and every metric that they measure is hitting one after the other on huge increases on a year-over-year basis. So again, when they turn that corner to profitable, all those multiples are going to start making a lot of sense, and they're going to look really appealing to investors. So if they can continue on this path, I think it's going to be a great company a year or two from now.
Yep, and right in the sweet spot of holiday shopping season. And the partnerships
Exactly
that
right.
they have with Apple Pay, Amazon, I believe, is in there also. So, yeah, they got good partnerships also. All right, great stuff. Great data as always, Landon. Have a great day.